Good evening. Good evening, class. Just apologies to join you late. I'm just waiting the expert to make me co-hoster so that we can start our today's session. So class, can you please confirm if you are able to see my screen? Hello? Okay, that's good. So yes, that's good. Thank you so much. So now, as concluded yesterday, we have just agreed today we are going to do a question. That is a question from past paper of Icpar. So it's a question one from June 2019. I hope each and everyone also has already downloaded it because I just want you to go together and then see how this also should be corrected. Okay, good. So now, you can see just by starting reading this question, the question was just saying we have the company which just called Shahui Rwanda Limited, which is a private residential company and is engaged in the importation, distribution, and the sale of homes and personal care products throughout Rwanda. So business operations just commenced on 1st January 2016. The main products sold include various brand of petroleum jelly, bathing and washing soap. They have toothpaste. There's also multi-purpose cleaning powder. So the company owns a big warehouse in Gasao district of Kigali province. The company also owns a fleet of 20 delivery van and 10 trucks to ease the distribution of its product. And again, they are saying SRA is a subsidiary of Shauri Kenya Limited, which is a private company also based in Nairobi, Kenya, which hold 100% share in this Shauri Rwanda. So again, they say Shauri Rwanda import all goods from SKL, who business is manufacture, distribution, and sale of home and personal care product throughout East Africa and beyond. Also, you can see the other information is relating to the financial statement. Financial statement of profit and loss account and the other comprehensive for the year ended 31st December 2018. When you look at into this profit and loss account, you can see we have the revenue, we have cost of sales, where we have note one, and then gross profit. We have also the expense. Under an expense, there's a depreciation, we have sales and distribution, we have entertainment, we have management fees. So you can see, and we have also a profit before tax, which is this one. And then you can see from additional information, there is additional information from 1 up to 8, up to 9, 10, up to 10. So now, when you are just dealing with this such kind of question, the first things you have to do, I can see here maybe the examiner tried to just to note, to mention the note that corresponding to each and every item. But there is a time where the examiner did not do this. So in the case, the note will not match with the corresponding transaction. That is the first step. The reasons why of doing that one is just making sure at least where you are just answering, there is no additional information that you left out. So it means that if you have noted all additional information just under the profit and loss account, you are sure at least when you reach on each and every transaction, you remember that there is additional information that's talking on that additional information. So you see the additional information one, it's okay. It's just mapped on a cost of sales. You can see additional information number 2. Also, it is mapped on selling and distribution. So additional information number 3, it is also mapped to entertainment. So you can see also on number 4, it is also mapped. So number 5, it is also mapped. 6 also, 7 and 8 as well. So let's see also the 9. 9, they are saying information relating to property, plant, equipment for the year ended 31st December. This one is related to the wear and tear as well, capital allowance. So we can see where there is depreciation, and then we put number 9 as well. So now on 9, we can put here, on depreciation, we can put 9 as well, so that we can also make sure at least when we reach on depreciation, we also remember there is additional information that is just related to this depreciation as well. So again, there is also the additional information number 10. They are saying the company had a tax loss brought forward from the year 2017, which is equal to this one, and then the loss for the year ended 31st December 2016 had been this one. So it means that this one will be just adjusted at the end before just getting the taxable income. So we can put anywhere, but let's put at least on the profit before tax, where we can put like 10, so that at least we also know that there is additional information that we also consider at the end. So now, as per the format, you see, if you remember well what we have just said yesterday, we say that the examiner, there's two ways the question should be given to you when you are in exam. The first way is where the examiner just provided you the profit and the loss account. So on that case, we have seen also the process that we have to follow just to get the taxable income. So under this scenario, you can see already the profit and the loss is given. And then as per the format, as we have seen yesterday, so we start with the reported profit. Okay, reported profit. Let me just, there's 30 above. So that is reported profit. We can put here with the 3 zeros, and again here as well. Okay, so the reported profit here is equal to 2 million. Okay, let me just put this down. At least we can, let me just put it like here. Okay, that's good. So someone is telling you can zoom. Okay, let me just try to zoom as well. Okay. So are you getting? I'm trying to zoom. Okay. Okay. So now, on the reported profit, we have 2,979,842. Okay, that is the reported profit. So the next step, we just to adjust. We add an unallowable expense. So it's just the expense that were deducted, but which are not also allowed for tax purpose. Okay. And then after this, we have seen also, we can also add let's put adjustment. Any adjustment, if it is any. Okay. We can also add omitted taxable income. Okay. And then we have seen also we can also deduct non-business income. So, and then we can also deduct non-taxable income. So we can also deduct omitted expenses, let's say allowable expenses. Okay. And then there we can also see if there is also other item that we have to adjust. So Claude is asking which year this question. Yeah, it is just June 2019. Okay. Now, so when you are done just by putting this reported profit and also this other additional information that you will just also adjust as well, you go step by step. So the reason is why you go step by step is making sure at least there is no item that you left behind. So now you see we have the first step is revenue. And then with revenue, there is no need just to do any more on it, unless if there is also the additional information. If there is no additional information on revenue, just to leave it and then we continue to the next. For the next is the cost of sales. Again, on the cost of sales, there's no need to do much on it unless there is additional information. But here you can see there is additional information, number one. For additional information, number one, you can see they said the examiner said, so ESR pays a royalty of 5% of sales made during the year to SKR, and the royalty is included in the cost of sales. And then SRL comply with all its tax obligation in accordance with law number this establishing taxes on income. So if you remember well, we have seen from under non-royalty expenses, we have seen the management fees, the royalties and whatever which paid to non-residential taxpayers. It is limited on 2%. So any excess is not allowed for tax purposes. So it means that even though the all obligation has been complied with, but you can see the 5% paid is above 2%, which is allowed for tax purpose. So it means that 3% should be added back as an allowable expenses. So now we can see here, and then remember, because it is included in the cost of sales, so yes, it says maybe yeah, it was included in cost of sales, so we have to add it here. So we said overpayment of royalty to SKR. Okay, now, which is let me just put other here column. Okay, so like let me say call it as description. So it is just 3% above 2% allowed. So now it is just 3% times, because it is just 5% of sales. So sales is this of 16. Okay. 550. Okay, now that is this one. So it means that here we can see it's almost 3% times 16. Okay, which is this one. Okay, now we are done with additional information number one. So niyo mwongere kuvuga ngo none se bavuze ko ari non resident, ariko it is clear on the background bavuze ko iyi SKL it's just a subsidiary. I mean iyi SRL ni subsidiary ya SKL. SKL ni private company based in Nairobi. So it means that izi royalties bishyuye bazishyuye kuri kampani idakorera mu Rwanda, so it's very clear. Niyo mpamvu rero nababwiye ngo when you are doing this exam, it's better to pay attention on these details, kuko ntabwo wavuga ngo niba utumvishe background n'information zirimo na implication ziragira ku gisubizo ngo ugiye gusubiza rwose, kuko ahangaha niho umenyera icyo urakora muri rusange. Kuba zarishyuwe rero kuri company based in Kenya, so yishyuwe kuri non-resident taxpayers. So now we can just limit our royalty fees at 2% as per the law. Now, let's move to the next. The next is just depreciation. Actually, as you have seen, depreciation for accounting purposes is not allowed for tax purposes. So we put depreciation here. You can see we have 543,865. And then we move down on additional information where we put 9 and see the 9, which is what is just telling us, and see what we can do on it. You see on 9, they are saying we have information relating to property, plant, and equipment for the year ended 31st December 2018, which is as below. We have a tax rate and the value of the asset as at 1st January 2018. Where we have computer and accessories, we have also other business assets. But also they says building, SKR purchased the warehouse building in Gasabo district at 900 million on 1st December 2018. The value of the land on which the warehouse is built at the time was 50 million. The warehouse was put to use with effect from 1st January 2016. Again, they say other asset that were about during the year ended was this one. We have 5 trucks, each costing to this amount, furniture and fittings, motor vehicle to be used by the chief executive officer, and then we have also information system software estimated to last for 15 years. And then we have also the disposal that were made, where examiner also is selling 3 trucks whose value had reduced to 0 due to accident, well sold for total amount of 30 million. So now, okay, so now we are just moving and then put a working here. So we are just going to compute the capital allowance. So on the capital allowance, as we have seen, we have like a format, description, and then we put here the type of asset that we have. So you can see on asset, I've seen like building. So I have seen so there is a truck. Let's put this computers. There is a okay, let's move truck. So there is also furniture and fittings, motor vehicle, and information system software. So we have here motor vehicle. So we have also furniture and fittings. We have also software. And we have also other assets. So now, when you see we have costs and tax written down value, So on breeding, you can see we have, they said SKR, the parent company in Kenya, sorry, it's not here. So they said a breeding SKR purchased the warehouse breeding in Kasabo district at 900 million on 1st December 2018. And then the value of the land on which the warehouse is built at the time was 50 million. The warehouse was put to use with effect from 1st January 2016. So now on this first, you can see maybe it was just a mistake by the examiner, because here he or she is referring to SKR company, which is the company based, the parent company, which is based in Kenya. And now for us, we are dealing with the Rwanda company, subsidiary that operating here in Rwanda. So now, maybe here there was a mistake, but if there was no mistake, so it means that this cost of building should not be recorded, kubera ko ntabwo iri concerned na company turi gukorera. Ni ukuvuga ngo ni iya parent company, and then nta yindi information batanze whether it was transferred to the subsidiary company later. So if it was not transferred, there is no need. But if it is a mistake, so nuvango it should be recorded. Let's assume, kugira ngo byorohe, let's assume there was a mistake, and then tuvuge ko this breeding was just bought by the I mean SRL. I mean that was Shaula Rwanda Limited. Yeah, Shauli Rwanda Limited. So let's assume on assumption one. So assumption. So we assumed that breeding was bought by Shaula Rwanda Limited. Okay, that is the first assumption. So it is here, and they said the breeding was just purchased at the cost of 90 million. Let's put also 3 zeros here. Okay, let's put 3 zeros here. And then it was just 90 million. And then you can see they also said on 1st December, and the value of the land on which the warehouse is put at that time was 50 million. And the warehouse was put to use with effect from 1st January 2016. Here there is a mistake for sure. So there's a mistake also, because you can't say the asset was bought in 1st December 2018 and then put in use on 1st January 2016. Maybe he wanted also to say that it was just put in effect from 1st January 2019. This question is full of mistake. Okay, let's see Maruso. (2019). So in this case, because even though the asset was just built on 1st December 2018, but you can see it was not put in use. It started to be in use in 1st January 2019. That is the assumption that we made. In that case, we can't just compute the depreciation in this year, because remember, our computation is relating to the year ended 2018. So now let's just put it here, but there is no depreciation that will compute. And then regarding to the value of land, remember the land is not depreciating. So even though you can put it here, but there is no depreciation on the land, you can leave it or you add it here. The land value, maybe let's just put it and put land here. So at least you can, okay, land, and then put here the 50 million. But remember, the land is depreciated at, there is no depreciation on the land, actually. So now we are done with this building. So the next asset that was provided is just computer. On a computer, they say we have computer and accessories, information and communication system whose life is below 10 years. And then the balance was 324. Okay. So on the next, also there was other asset where we have also on the other asset, they are valued 12,356. Okay. So now on other item, there's also they said this building we're done with it. So there is also other asset about doing the year. So it means that that was sorry. That was, let me put this down because this is under addition. That was the costs. And then for addition, that's where we have also this kind of land and the building as well. And also on the other addition, we have also the first, we have computing, we have 5 trucks, each costs 65,000. So we have to times with 5. So on truck, we have 65 times 5. Okay. So now we also we have furniture and fittings of 3,000. Furniture and fittings, we have 3,000. We have also the motor vehicle to be used by the chief executive officer, which is 30 million. Motor vehicle, which is 30 million. Okay. So now we have also the information system software estimated to last for 15 years, so which is 400,000. So on software, we have 400,000. Then just put comma here. And then we have also, again, for here, there is also disposal, 3 trucks whose value had reduced to 0 due to the accident were just sold for a total amount of 30 million. So you can see if these trucks has been just reduced to 0, so it means that the net book value was just on 0, and then for the sold amount it was 30 million. This is just a gain on disposal. Okay, because you can see that is, let's just put additional information again. So Akinjene does 900 million cost building close to 50. So we can check because, and they said building departure was just costed 900 million on 1st December. The value of the land on which the warehouse is built at the time was 5 million. So it is just separate. We have a value of building and a value of land as well. It is not included. Okay. So now, okay, that is working 1. Let's just put 1. So let's also put working number 2 regarding to the gain on disposal. So because you can see, they said we have a truck. So net book value was just a 0, and then proceed from disposal was just 30 million. Okay, and remember, so again, what we do, okay, we take just the net book value and then, sorry, just to avoid, let me just put the description here and then put here NBV, net book value, to make it more clear. So now it's just this one minus this one. So that is the gain on disposal. So for this gain on disposal, that means that this should be taxed. So when you get this one, you come here and then you add it. Maybe let's just add it on add omitted taxable income. So we put here gain on disposal, which is 30. So I put 30 million. Okay. Now I think we are done with this additional information. And then okay, now we are done on this additional information. So we can now maybe try to add, but before adding, let me just see if there is also any additional information from other transaction provided here, where we can also get also any other capital expenditure. But for this additional information, you can see even though they say this track had reduced to 0, but the examiner also did not also disclose the cost. So if maybe the examiner disclosed the cost, we should have been deducted from the cost of tracks we have here. And then you can see still we have a constraint because we can't know either okay, so had you want to leave, because you can be back on gain disposal. So on gain on disposal, you can see they said, the examiner said the 3 trucks whose value had reduced to 0 due to the accident, due to the accident, were sold for a total amount of 30 million. But also, yeah, it is here. So now, okay, so because it is very clear, okay, let me just put it here. Remember, I was forgetting that it is they said track whose value had reduced to 0 due to the accident were sold for a total amount of 30 million. So you see we have 5 trucks. So it means that 3 of them has been already disposed of due to the accident. So it means that should be excluded from the list of the asset. So now we have additional, but also we have disposal. So on disposal, so we go also on trucks. So where we have 3 of this one has been already deducted. So it means that this one should be removed. Okay. So now at here we can compute the depreciation base. On the depreciation base, here it is 0, and then it is 0. Remember, the reason is why on building, we assume that this building has been start to be used in the 1st January 2019. So there's no need just to there was no corresponding depreciation in this year that we are just computing the taxable income. So on computers, so what we do, take this, we add additional, and then we deduct the disposal, which does not have. So we scroll and then we see, okay, that's good. Now, sorry. Oh, software. Why I put it here? So it should be here. Okay. So that means that, okay. Now that is depreciation based now. So when you see depreciation rate, so you can see here there's no, sorry, it is zero. On the computers, it is a 50%. So the reasons why we are putting 50%, you can see also from additional information they said, the computers and the accessories, information and communication has the useful life of below 10 years. If the examiner maybe here says it is over 10 years, so instead of just applying a 50%, we should have been just applying here the 10%. And again, on trucks, it's 25%. So now we have also, let me put percent here. So then on motor vehicle, it is also 25%. So on furniture, it is also 25%. So on software, because it was clearly also say that the information system software estimated to last for 15 years. So because it is above the 10 years, so we apply here 10% instead of 50%. So now here also apply 10%, and then on other asset is 25%. So you can see on the depreciation, or we are in here. So you can see we take this times this one, and then we see the total. So the total will be okay. This one. But just before moving to up, let me just also try to see if there's no other asset that you might add due to other additional information. Okay, but at least we have also workings on capital allowance. So now I think we are done with the additional information number 9. So the next item here we have is just selling and distribution. Under selling and distribution, you have also additional information number 2. So it is also saying included in the selling and distribution expense are the following amount. We have a bad debt written off of 15 million. And then the company makes a general provision for bad debt of 10% of all the debt outstanding at the end of the year. The receivables as at 31st December, well, this amount, and the provision for the year was included in the selling and distribution expenses. All other selling and distribution relating to directly to the business activities. So you can see first on the first item, we have a budget of 15 million, and we know we have seen under budget to be allowed, there's a conditions. If it is less than 3 million, so the only things that the examiner or taxpayer has to show, he or she has to show that they have also first this amount included in the previous income statement, and then it was also written off. That is the first two condition, and the third one is also to show that they have tried to recover that amount but failed within the time of 3 years. And then when it is more than 3 million, the court decision should be also presented, showing that the debtor has been declared bankrupt or insolvent. So now you can see here, the examiner just provided a figure of buy rate, but there is no other additional information, whether maybe saying other condition regarding to buy rate has been fulfilled or it was not fulfilled, or maybe the condition 1 and 2, whatever it was just fulfilled. So in that case, this one should be added back unless you make an assumption. But here there is no need to put an assumption because it is not given. So this budget should be added back. So not necessarily added the computer software we charge them after 10 years or if they will last. So Shadrach is just if it will last 10 years. Because when we are just dealing with the depreciation, we just refer to the useful life. So here, what was just being provided. So you can see the information system software estimated to last for 15 years. So it means that the useful life is more than 10 years. We don't just consider at the time when uh, uh, it will be just used while the time when the asset will be last in use. Aha, Eric, that is a good question. So you said, I'm thinking we can calculate the accelerated depreciation on 5 tracks, each because each costs 65 million. Aha, if you remember well, naravuze ngo yesterday, kugira ngo the computing accelerated depreciation, hari condition. Ariko the condition iri key ni uko taxpayer agomba kuba afite investment certificate from RTB. Remember, iri tegeko rijyanye na accelerated depreciation cyangwa investment allowance ni itegeko rya RDB ntabwo ari irya RRA. Ni uko nyine bayihura kuko RRA na RDB birakora. Baravuga ngo for us to motivate, for us to encourage the investors, let us provide the allowance regarding to the investment. Whoever just invests more in the asset more than 50,000 USD on each asset, that one should get the allowance. But before just giving him or her that allowance, they should also seek the investment certificate. And then from the additional information or from the background of this company that we have seen, there is nowhere examiner said this company has requested and be provided the investment certificate. So there is no need to compute the accelerated depreciation. And again, as I said, because we know now, yes, the Akijene is just trying to responding you. So now, again, nubwo dufite 65 million. Remember, twavuze ko now, they assumed when the law is enacted, they assumed that the 1 USD is equivalent to 1,000 Rwandan francs. Yet today, the 1 USD is more than, is equivalent to 1.5 thousand. So it means that nabwo there should be additional information regarding to the foreign exchange that you should consider. In that case, mu gihe wenda batayiguhaye uretse ko we have agreed with Icpar going forward, there should be there kugira ngo bakureho iyo confusion, kubera ko otherwise someone may apply, may assume that the exchange rate was just 1.5 thousand, the other assumed it was just 1,000. In that case, you see, you are just trying to confusing the student. So we said at least we have to put the foreign exchange exchange rate, so at least someone they can apply the same. Ariko, it's okay. That's one is an addition. Ariko, the main is just investment certificate. Ndumva icyo ngicyo cyumvikanye. So yeah, that's good. Akinjene just give you the good answer on that one. Okay, let me see if there's also other question. Yeah, it did come clear. That's good. Okay. Okay. Now, so On bad debt, we have just to add here, we have bad debt of 15 million. Okay. And again, the second point on sales and distribution, the company also make a general provision for bad debt. So we have seen the general provision. Once you see this is general provision, automatically is not allowed for tax purpose. So the provision that were made is just 10% for all the debt outstanding at the end of the year. And you see the receivables is also given. So it means that the provision also, we have also to add here, provision for bad debt. For bad debt, which is equivalent to, that is 10% of receivables. So that means that that is equal to 10% times Z. So the receivables at the end of the period was Z 32869. Okay. Okay. Is it clear? Is it correct? 328. 69. Okay. But we have to remove 3 zeros here. Okay. So that is this one. Okay. That's good. Now we move to the third point where they say all other selling and distribution expense related directly to the business. That's one is allowed. So now we are down with the selling and distribution. So we are now going to entertainment, where we have additional information number 3. So on entertainment, they said entertainment expense are comprised of the following: maintenance of playground stuff, play various game every Friday. So you see maintenance of playground, which is 72 million, and then we have staff end of the year party, which is 28, and the create end year party of 50 million. So you see, if you remember the law, it said on entertainment expenses it's not allowed for tax purpose, except when it is just relating to sporting activity for the whole staff. Okay, ni ukuvuga ngo entertainment first is not allowed, but the law also says it is allowed for sporting activity, which is just planned for all staff without just discrimination, saying, for example, this is for senior, this is for what and whatever. So for this maintenance, it's just playground, sporting activities, which is just purposely for using it with the staff, playing for every Friday various game as well. This one is relating to what the law is saying regarding to the sporting activity. It means that this one is allowed. So other entertainment is not allowed. Staff and the party is not allowed, and the client and the party is not allowed, unless if maybe it was clearly maybe indicated, for example, on the client and the party, it was just the purpose of like for marketing and whatever. But if there is no other further information, this one is not allowed. So nukugira ngo ibintu byorohereza twebwe tuzajya twirifaringa ku itegeko rivuga ni nacyo even when for example the auditors of RRA when they came to assess your tax declaration and whatever, what they see what you have just spent vis-a-vis what the law is just providing. So it means that niba itegeko rivuga ngo entertainment fees ntabwo zemewe uretse fees zijyanye na sporting activities ku bakozi bose, ubwo ibyo urumva biri clear. Ariko niba uzanyemo ngo there is a staff and ya party, izo ngizo ntabwo rwose bagira, kuko barakubwira ngo ibyo bihuriye na sporting activities twavuze zemewe under entertainment. Client ni iki, ariko maybe for additional information we ushobora kuvuga uti wenda the client and ya party was made for example kugira ngo ari uburyo bwa marketing, kugira ngo mfashe abakiriya banjye twongere tugere gute, ibyo ngibyo birumvikana, ariko ibyo birumva ni ibintu biba supported ku ruhande. Naho staff and ya party, impamvu wenda ashobora kubavuga ati kubera iki uwo muntu wenda utamuhaye amafaranga, kuki mutageneye umukozi amafaranga, wenda is bonus and whatever, none iyo bonus urabizi ku rundi ruhande ihita yishyura umusoro under pay. So urumva bona icyo baba batagetinga, baba bavuga ati wenda uyu muntu yanze gutanga bonus ku bakozi kugira ngo akwepe imisoro ijyanye na pay. So niyo mpamvu natwe tutagomba kubyemera, ahubwo agomba kubyazenga bikishyura umusoro kuri CIT. So it means that here staff and the client and their party should be added here. So we have staff and their party, and then we have also client, and their party. So when we have 28 and then we have 50. So now we have 28 and now here I have 50. Okay. So let me see if there's a question now. The maintaining a playground on an expense or capital expenses. That is maintenance. Eric, that is maintenance. It's not just maybe. I don't know if you are reading it clearly. Because it is maintenance. It's not neither expansion, neither so it's not expansion. It is not maybe adding value to whatever to the asset. It's just a maintenance. Maybe it's like just a cleaning, painting, whatever. So that's one is just allowable expenses. Kuko ibyo tubara as capital expenditure kuri asset ni igihe either habaye expansion cyangwa kongera agaciro cya kintu, cyane cyane wenda haba nko partitioning and whatever, aho ni kuvuga wenda kuri building, ariko ku nyubako kuba wakora maintenance, wa paintinga, wagira gute, that's one we consider as an expense. It's not just the capital expenditure. Okay, so now I think we are done with also the entertainment. So we are moving to management fees. We have also additional information number 4. On management fees, they say the management fees were paid to World International Limited, a company that is a tax resident in the United Kingdom, for the provision of professional advice relating to the branding of products sold on Rwanda market. EUL is the holding company, SKR. So it means that this one is also treated as royalty. So what we are going to do is just confirm it is if it is not more than 2%, because the only percent allowed is 2%. When we find it is more than 2%, so the excess should be added back. So now, again, I believe we made a mistake on provision for bad debt, because it's okay. Okay, it's okay. Let me check on the provision bad debt. So it's not correct what we did. How much is this? Receivables is it? 3. Okay. Yes, you're right. Gatatu kabiri. Magana atandatu makumyabiri n'icyenda. Okay. Yes, you're right. So that is this one. And then you can just put, okay. So you're right. Then another question we have. So Eric, but they did not specify the type of expense. What we are talking about, you are talking on what? On the maintenance of playground. So niba uri kuvuga kuri ya entertainment twagize kuri maintenance rwose, ni ukuvuga ngo type of expense, I don't know what we are just want to clarify. You can just unmute maybe to give more clarification on your question. Ariko whatever you see, it's a maintenance. Maintenance is just allowed for tax purpose as an expense. Kereka wenda iyo maintenance bagwa as in additional information. Hari igihe bayigwa as maintenance in additional information. I mean in the profit and loss ariko munsi bakavuga when the maintenance was regarding to participation, office partition, there was also expansion and whatever aho ngaho rwose birumvikana ko it's capital expenditure ariko if it is maintenance yo ubwayo it's allowed for tax purpose. Okay, now so we are now on management fee. So on management fee, let's just put it here. In case we find it is below, we allowed it. And then in case we find it is more, so the excess will be added back. So as we have seen, 2% of revenue is allowed, okay? That is the first step. So now we are now going to see 2% of it. How much of it? So we can see only 2% still. So 2% miliyoni 16,500. Okay, 2%. So it means that you can see it should be, sorry. It should be this one. And then when we see on the management fee that was provided is 200. So it means that there was an excess of 200 minus this one. This one should be added back because it is more than the 2% which is allowed for tax purpose. Unizel, please also help me to understand the overpayment to score, which score say ivuye noneho mwakabyara. Score. Unizel, can you please clarify your question? Okay. So now, oh, sorry. You are right. It's just 3 zeros. We omitted 3 zeros here. And now you can see you're right because it is just one which was paid is less than this. So it means that here we have to put it is allowed. We put just it is less than 2%. So we made a mistake just when we are just computing the allowed amount. We omitted these three zeros here, while we have also 3 zeros above. Okay. Yes, yeah, you're right. So it was a mistake because we have omitted the 3 zeros here for ordinary office expense number one. Okay. You was talking about this overpayment. So also on this overpayment, as I said, this is also related to loyalty payment, loyalty fees. And then on the loyalty, as we have seen, the loyalty and the management fees, which just paid to non-resident taxpayers, is just cutted or is fixed to 2%. So it means that whatever you see, it is more than 2% of revenue or sales. So the excess should be added back. So that is the reasons why we have added the 3% of this amount, because if you see on additional information number 1, the examiner says the rate was at 5%, yet the allowed percent is 2%. So that is the reasons why we have also added this 3%. So I think it is very clear here. And then thank you for just making this collection and management fees, because we have also meted the 3 zeros, and now we can see the amount paid is below the allowed rate, the allowed percentage. So now it is allowed. So you can even put 0, which is very clear. Okay, now we are moving to brand and marketing. On the brand and marketing, there's also additional information number 5, where they say on the brand and marketing expense comprise the following amount. There is contribution to Icpar and register the community self-help project, which is equal to 20,000. And also there's fines paid to Rwanda Environment Management Authority. There's a commission paid to agent. There's also other expenses directly attributable to the business. So you can see on this first, this contribution is just like a donation. And then on donation, we have also yes, on a donation, we have also the provision, which is clearly saying how donation should be treated. On donation, also we have seen the donation that is allowed is just the donation which is not less than 1%. And remember that 1% should be provided to non-profit making organization. So the first we have to see, is this contribution made to non-profit organization or not? Because you can see the contribution was made to Icpar, a non-registered community self-help project. Okay, it is not registered. We can't even know if it is non-profit organization or not. This one should not be allowed. Kubera ko any non-profit organization should be registered. Igomba kuba ifite ubuzima gatozi, yagiye muri RGB, ifite ibyangombwa. Niba rero ari ikintu kidafite ibyangombwa kitazwi, icyo ntabwo kizwi. Ntabwo wavuga ngo donation wayikoze kuri organization itazwi. Ni nko kuvuga ngo ihaye umuntu utazi utabaho. So that one should be added back as in anaerobic expenses. So we have contribution to is it Twimbake? Is it what? Twimbake, is it Twimbake? Yes, Icpar. What is kind of the name? Icpar, which is equal to how much? Is just 20. Okay, it's at 20. And again, we have also a fines paid to Rwanda Environment. We have seen any finance penalties not allowed. Fines to REMA, which is equal to 35 as well. So we put 35 here, and then let me just move it. Okay, and then we have also the commission paid to agent. The commission is allowed, and the other expense, which is just directly attributable to the business, this also is also allowed. So then there's also now we are done on the brand and the marketing expenses. So we are moving to the donation as well. You see the donation also, it is coming. Donation on additional information, including the donation are the following amount. Kigali Orphanage, a non-profit making organization. And then we have also Kayayo Limited, a distributor for construction of school. We have also sponsorship of the mountain bike race Kigali Butare. That's one. You see, this one, the first one, that is the one that we are just going to see if it is more than less 1% of less of or more than 1%, because it is the one that was provided only and the profit organization. But for others, this one should be added because it was provided to the company or business institution which is either making profit and whatever, doing other business which is not profit making organization. So now you can see on Kigali Orphanage. So donation. So just for you want to check. So now, what you see, you can see now we have what? 1% we have here is equal to is equal to 165,500, and then the amount paid is equal to 200,000. So it is more than this amount. So we have to take this, just put this here, and then take 2 minus this one. So this one should be also added back. So then we have also donation that was made to Kayayo Limited. This one just a company. This should be added as this, which is 50. So we have also donation. So let me just donation. Donation to that was sponsorship of mountain bike race Kigali Butare. Mountain bike. So now, on mountain bike, you can even ask yourself why this one, maybe the mountain bike and whatever, ishobora organization idakora profit. Ariko remember that's the sponsorship. Ariko sponsorship, ubundi ukora sponsorship mu kintu nacyo gifite corresponding revenues. If there is no other where it was indicated, maybe kuri mountain bike, it's a business, bakoramo, I mean, it's the other company where they have shares and whatever, and then kugira ngo bagaragaze na profit n'iki byose, ibi ngibi for tax purpose ntabwo tubyemera, kuko ntiwavuga ngo ufite amafaranga ngo usponsoring ikigo runaka kandi nta investment ufitemo. In that case rwose for tax purpose ntabwo twabyemera, kubera ko remember the philosophy cyangwa the principle ya taxation muri rusange baravuga ngo any expense that you are claiming should have the corresponding income, or any income that you are just adding should have also any corresponding the expenses. Ariko sometimes kuri Rwanda Revenue, for them they look what is benefit for them, even though you are showing there is an income, but for them, as long as it is just increasing the tax, there is no problem for them. But in case when they are reaching on the expense, my dear, they have to go in details and see which kind of these expenses. Is these expenses directly linked with the business? Is this expense supported? Is this expense being so they look each and everything on expenses. So ntabwo wavuga rero you have made an expenses which does not have a corresponding income ngo bakwemerere ko bayemera as an expenses. So now you can see these also should be added in full. We have 185. Okay, 185. So now moving to the next item, I think now we are done also on donation. So it is just salary and wages. This one is allowed. So we have also office consumables. consumer market research. 7, consumer market research. So on 7, it is saying the company does not have supporting document for the amount of 135 million spent on other on activity of market research conducted on consumer behavior. So now, so that means we have seen core market marketing research training and marketing expenses ziremewe as long as zishaka promoting the activities of the business, ariko tugasanga ko research and whatever relating to capital expenditures zitemewe. So niba rero barashaka gukora research kuri consumer satisfaction maybe kugira ngo bamenye what they can improve so that they can help them also to generate more revenue, that one is allowed. Ariko still the additional information is saying some part of them is not supported, so it means that that one should not be allowed. So we put also consumer market research. Consumer market research. So which is equal to 35 million. This one should be added back. So now we are done on the consumer market research. Other is office consumables. This one is allowed. We have also other administrative expenses, which is also is allowed. We have also financial costs, which is also have additional information number 8. So on financial costs, they say on financial costs, the parent company, Shaula Kenya Limited, the parent company in Kenya advanced a loan of 500 million to the company, and the finance cost is interest on the loan paid to this company. And then this Shaula Kenya Limited owns 100% of share, and the share capital of the company comprises of 100 shares of this one. So it means that, so let's just see the equity, the share holding, the share capital of this company that was just acquired, and then we compare with the loan provided just to confirm the thin capitalization. So now let's put working number 3. You can see, Shauli Wanda Limited share capital that was acquired at 100% was equal to 100 shares. Is it 100,000 shares? Sorry. Yes. That was 100 shares times the value, which is million. So it means that Novango share capital zabo zanganaga na 1 million. So that means that the loan that was from financial institution or related party should not exceed 4 times of share capital. So that means that loan wemerewe is this one times 4, which is 400 million. Okay, and then you see the parent company yabahaye the interest, the loan, which is 500 million. So the loan provided was just 5 million. So it means that as per yes, loan which will not be so interest will not be allowed. So it's a difference because you see, any loan which is more than 4 times of equity, that one should not, the interest paid on it should not be allowed. So that is this one minus this one. So now the financial cost, the interest paid is how much? The interest paid, which is the financial cost, was how much? Was 50 million. Was 50 million. So that means that the non-allowed, that was only total of 500 million. So non-allowed interest is just equal to this amount times 100 over this one. So which is 10 million. That one should be added back as non-allowable expenses. So we put here, sorry, let's grab here. We put here financial costs, thin capitalization. And then we put how much? 10,000 as non-allowable expenses. So I think now at least we are done. So before just making addition and whatever, so luck. What if SK only partial like 50? So that's good. You know, Yotuvuga, it is also only 50%. So you owning 50%. Also, we have I think it can also have any impact on it because also, you know, what we see the total capital of the company. It just it is not just the shareholding of the either parent company or it's the party companies. The law, it is not clear. Maybe the law what it says is just the total capital equity of that company. It's not just maybe saying, for example, if it is a company that's providing a loan and then that company has share in that company, it should also, this capitalization should be assessed according to the share capital that company has in that company. Kubera ko loan nta kintu bivugaho rero, so we consider the whole or equity your company, not just seeing only on the shareholders your company for if it. So I think that's what I can clarify on this. Kubera ko tugenda ku itegeko rivuga sometimes iyo itegeko riri muted or when the law is not just exhaustive, otherwise because you can't say this and this and that, at least you can refer to the law. So Claude, how do you get finance cost? Is there provided? So it was already provided in the question. We can see it was provided here. So that's why maybe you expected to calculate the interest by using the interest rate. Ariko, it is not provided. What it was provided just the financial cost. Then wakavuga ko the financial cost is just relating to the loan provided from the parent company. And then what we did here just to check if there was an issue, if there was either there is an issue for thin capitalization or not. Kubera ko iyo dusanga the loan provided is below 4 times of the equity, so ahangaha the whole financial cost should be twari kuyemera as a robber expense. But because we have seen the 4 times of equity was 400 million and then the loan provided is 500 million, so it means there is an excess of 100 million. So it means that the interest that is relating to this 100 million should not be allowed for tax purpose. You can see on the interest, if you have maybe followed well, we take just the interest, which is financial cost provided in the question, and then we times 100 over 500 million, just to check the related interest of this 100 million. Okay, I think also it is very clear. Feeding capitalization. Yes, and more, I think you are getting it now. It is not shareholding, just related party are concerned with yes. So ni ukuvuga ngo shareholding. First, Eric, you have to understand what is related party. Related party are those companies which has relationship. So you have the subsidiary and the parent. The subsidiary has a relationship with the parent, and then the related party also is included in the fin capitalization when we analyze the fin capitalization. The only thing that we exclude, which is the exception on fin capitalization, as you try to mention here. So if you're excluding is just financial institution, banking institution, insurance, and whatever, because we have seen those kind of company also they are dealing with the money, using the money of others, using the loan and whatever. So ugiye ku applying fin capitalization because their nature ntabwo byashoboka kuko nature yabo ni ugukoresha amafaranga y'abandi, ni ugukoresha imitungo y'abandi. Remember when you are paying the insurance, you are just, even though you are paying the premium, but it's a liability only the insurance, because they expect whenever what you insure is just occurred, they have to pay. So that is the liability of them. They become an income when also the insurance policy is ended. So it means that this one on financial insurance, I mean financial institution and insurance is not applicable. Okay, I think this is also very clear. And then let's just try to add. And I hope here every item was treated. So the only item that is remaining is just relating to item number 10 that we just treat it when we already done with our calculations. So now let me see. Okay, so now for this other asset, probably there was a mistake here because when you see the number is bigger. So I don't know, let me just put it so you can see what you have just computed as capital wear and tear. The total is this one. So that amount should be put here on omitted allowable expenses, and then we put capital allowance, which is a wear and tear. So let's put it here. Okay, sorry. This here. Okay, now for this item, there's no order. Okay, sorry. Here, we don't have it. Let's put this up. Okay, sorry. Okay, now we are just going to add. So here to add. Have how much? So we have, okay. So this one should be deducted. So it should be added, yes. And then this one should be deducted as well. Let's put negative here. So now when you see, we can see adjusted taxable income. So you can see on the adjusted taxable income, we take this one, take this one times this one times this, and then plus also this one, because it's negative, you can see that is adjusted taxable income. Now on the adjust, Okay, that is the just taxable income. And then we are just listing the loss. So we are just period. We are just going to, to consider additional information number 10. So what we are going to do, you see now, we see what is additional information is telling number 10. Additional information number 10 is saying, the company has tax loss brought forward from the year 2017, which was 375 million. The loss for the year ended 31st December 2016 had been at 579 million, which reduced in the year ended December 2017. Okay. Okay. So now you can see so akingeneye on a motor vehicle about to be used by the CO. Why did we add it wear and tear to the overall wear and tear? So now on a motor vehicle, even though it is just used by CO, here we have, maybe let's just check a well. So you see, maybe you are just confusing two things. There's two things that usually you done with the differentiation here regarding to motor vehicle and whatever. There is one, the company may buy a motor vehicle, and that motor vehicle provides to the CO. It is just detected to be used by the CO. But even though it is just detected to be used by the CO, it is the company vehicle. Okay, and then sometimes you will see it's just uh, made for just assisting the CO in whatever activities doing and whatever. There's also another ways that is usually done by the public institutions. Instead of just buying the car as an institution and just giving to the staff, senior staff, MOD, whatever, mayor and whatever, the electors and whatever, what they do, they provide what we call the lump sum. So they provide you money as a lump sum, and you go and buy your own vehicle, use it as your own, and then you pay the interest on that loan. That amount provided as a lump sum is just taken as the loan. And then remember that amount also should be included as allowable income as benefit in kind on the other side, where you have also to pay that amount should also have to pay the pay as well. So on this case, because you see the examiner, they did not say, for example, this this vehicle was just bought for CO, and then the CO will be used as the owner. So it means that even though it was bought for being used by the CO, but at least it was just company vehicle. So now, because it is still belonging to the company, so you have also to compute the wear and tear. So for other side, we don't know what is included between the CO's contract with that company, because sometimes you can see during the negotiation, the company may say CO will come and then we pay this amount. Also, will be provided the vehicles that we're just using for different activities. Ahangaha rero rwose impamvu twayishyizemo ni ukubera ko ni kampani nyine, ni imodoka ya kampani, nubwo ikoreshwa na siwo ariko ni imodoka ya kampani. So ntabwo wavuga rero ngo kubera ko ikoreshwa na siwo ngo iraba excluded, boya, kubera ko on the other hand siwo is part of management, and then remember muri management barakubwira ngo iyo ufite umuyobozi ntumuhe, I mean sometimes ni ukuvuga ngo umuyobozi ufashwe neza cyangwa ku rundi ruhande umuyobozi ubona ibyo akeneye byose kugira ngo akazi ke gakorwe neza bikontributinga ku musaruro w'ikigo. So ntabwo rero wavuga ngo ubwo byagenze gutya na gutya ntabwo byagira, ahubwo ku rundi ruhande iyo wenda tax revenue auditors aje maravuga okay that's good, nubwo mumuhereza it's okay, abikoresha muri operation n'ibiki byose, ariko se what about that allowance? Kubera ko on the other hand he should have been given iyo lump sum akigurira imodoka and then we akajya yimenyera byose, aho ngaho biba biri clear. Ariko ku rundi ruhande niba ari company yimuguriye nabyo biba byemewe, ahubwo bakareba ku yindi side. Rero kubera ko we don't have other additional information, what we are looking here, we are looking if this asset is belonging to the company or not. So I think that is the main reason we put this question, I mean this is a motor vehicle under the asset that should pay also the wear and tear. Okay. So hey, Twitter, can you shed light on the meaning of note 10? Sometimes understanding the meaning of scenario get confused. Okay, nibyo ngiye gusobanura James. So iyi question ni ya kangahe? I mean there. Ni June 2019, Jimmy. This question in June 2019. So James, on additional information number 10. So they said the company had a tax loss brought forward from the year 2017, which is 375 million. The loss for the year ended 31st December 26 has been at 579 million, which reduced in the year of 31st December 2017. So it means that you can see here the loss that we are dealing with is just the loss started in December 2017. This company has made a loss of 579 million in 2017, and then this loss was allowed to be carried forward for the next five years. So when in time arrived in 2017, you can see the loss has been reduced from 579 million to 375 million. So it means that in 2017, this company has made a profit. But even though they made a profit, still that profit has been overstated or offsetted by the loss incurred in 2016. That is the reason why you can see they are saying this loss of 2017 was carried forward, brought forward from 2016. So bivuze iki rero ni ukuvuga ngo what we are seeing that the loss is just keeping reducing. Starting in 2016 it was 579, and then to 2017 it is just reduced to 375, and now iyi ngiyi niyo turakaringa for the next year, kubera ko n'ubundi still nuvuga ngo yavuye muri 2016 tugiye 2017 babona profit, ariko kubera ko profit yabonetse yari nkeya n'ubundi itigabanyura loss yabonetse muri 2016, nuvuga ngo bahita bari codinga n'ubundi still loss muri 2017, and then iyi loss rero yabaye brought forward muri 2017, tugiye gukomeza tuyikaringe forward in the next five years. So that means that you can see here what we put here. Urabona here we made a profit ingana na 1 million. Is it 1 million? 1 million, 1 billion. So now we are just going to deduct what we had here as balance is equal to, okay, miliyoni magana atatu mirongo irindwi n'eshanu magana angahe? Magana atatu mirongo irindwi n'eshanu so magana cyenda makumyabiri na gatandatu. Now, so that's one should be deducted, and then we get taxable income, which is equal to this one minus that one. So turasigarana this one. So after this, we see what is tax payable. Tax payable is equal to this one times 30%. So ahangaha, for those who will do the old CPA, and then for the new CPA, you will just apply 28%. So this one times 28%. So that is the answer. So now, ndakeka bibaye clear. So unless if there is also any further question. Ariko wenda mbisubiyemo cyane kuri additional information number 10 kuri James we wabibajijeho, niyo mpamvu muba mugomba gusoma neza. Ni ukuvuga ngo ibi batubwira izi miliyoni 775 ni izabaye brought forward. Ni ukuvuga ngo already zaturutse muri 2016, kandi urabona 2016 twe dufite miliyoni 579 z'igihombo. Bivuze ngo tugeze 2017, icyo bivuze the difference between here was just the profit yabonetse muri 2017, ariko kubera ko already twe dufite igihombo kinini kiruta intuza yabonetse, so bivuze ngo ya nyungu yaragiye itwarwa na cya gihombo cya 2016, noneho hasigara aya amount rero asigaye arakomeza abe carry forward muri next 5 years. Ubwo bivuze ni 2017, niba tuyikuyemo 2018, iyo wenda 2018 tuba twabonye profit ntoya, twari kuzakomeza kuyakuramo until imyaka 5 irangiye. Ubwo ni ukuvuga ngo kandi iyo tubara imyaka 5 duhera ku mwaka ukurikira uwo igihombo cyabereyemo. Ubwo ni ukuvuga ngo duhera 2010, niba igihombo cyarabaye 2016, duhera 2017, 2018, 2019, 2020, 2021. Ubwo bivuze ngo iki gihombo kiba kigomba kurangira 2021. Iyo 2021 irangiye, igihombo kitarangiye, icyo gihe dufungira aho ngaho, ntabwo twongera kugikura mu zindi profit zizaboneka. Okay, good. So James, he was also just asking to tabulate this addition number 10. So let me just put it here. Working number what? Working number 4. Working number 4. So to look at, to get it very clearly. So now you can see we have loss. Let me just, we have a period. Make it clear. So we have here 2016, 2018, 2017, and then 2018. So profit here made a loss of is it 570? Is it this one? Okay. 79, yeah, that is this one. And then in 17, what they are saying that we have the loss brought forward, which is equal to, okay, let me just put it here, at least to understand. So we have the loss which brought forward, which is equal to 375. So dufite ahangaha, so that means that niba igihombo cyaragabanyutse kikava ku bihumbi kuri miliyoni 579 kikagera kuri 379, ni ukuvuga ngo kugira ngo byumvikane, dufite hano brought forward carried forward kugira wenda byumvikane neza. So on brought forward kambikore gutya sorry kimbizana hano kugira ngo byumvikane neza. Ni ukuvuga ngo hano on 2016 brought forward tuvuge ko nta twe dufite, ahubwo twe dufite carried forward. Carried forward yacu yari this amount, okay, and then on the 2017 batubwiye ngo brought forward kugira ngo byumvikane neza, brought forward yari ingana gutya. So wahita wibaza ngo profit yabaye carried forward yari ingana gute? Kuvuga ngo ufashe iki, sorry, ubundi carried forward ingana gute? That is the difference of opening this, sorry, minus this one. So ukabona ko yari aya ngaya. So bivuze iki? Biravuze ngo muri 2017 kugira ngo wenda byumvikane neza, ni ukuvuga ngo igihombo twari dufite, sorry, bo bameke miliyoni 203 ziraza, ni nkuko bavuga ngo dufite profit ingana 203 ku rundi ruhande, wenda kugira ngo byumvikane neza. 2017 twari dufite profit ya miliyoni ingana gutya, ariko so ingana gutya, ariko dufite loss from 2016 ingana gutya. So bivuze ngo balance carried forward, I mean brought forward izaba ingana ni amount just plus this, uko ari negative. So ukahita ubona ko ari iyi ngiyi. So bivuze ngo aya niyo inyungu babonetse yabaye yishyuye, I mean bafashe inyungu babonye bakuramo igihombo, ariko bibona ko still 2017 hasigayemo ikindi gihombo kitararangira. Iki gihombo rero nicyo n'ubundi bazakaringa forward muri next year ya 2010 na 2018. So ndumva wenda ariko nabisobanura niba wenda byumvikanye, ariko nuko bigenda, kuko icyo bagaragaza ni uko bavuga ko igihombo cyari gihari mu mwaka ukurikiyeho cyaragabanyutse. Wahita wibaza ngo what was happened, ni ukuvuga ngo icyabaye ni uko niba igihombo nari mfite cyagabanyutse, ni uko muri uwo mwaka hari inyungu yabonetse, then ariko inyungu zikaba ntoya ku gihombo nari mfite, then inyungu n'ubundi still ikagumamo. So now okay, let me see so I will need to do this scenario numerically. Okay. So Simana Theogene, what are you just asking? I can see second treatment. You just mean ko twakora ikindi kibazo cyangwa you just mean yuko if there is any other additional information ushaka kugira ngo tuvugeho. Okay. So now, I think now it is very clear we are done with this question. Ubwo bivuze iki? Bivuze ko icyo twakuramo when you are doing such kind of question, remember to make sure at least when you are starting, when the examiner has not just tried to link the additional information with the main transaction, the first step is just to link them. Kubera ko as long as you link them, it's better yuko utazigera missing any item not just treated. And again, start from one by one. You have answer booklet which is big and you have a lot of page number. Don't worry. Ushobora kwandika first page, reported profit, ukashyiraho na narobe expenses for another, ugataruka ugashyiraho other whatever kugira ngo ugende ubijyanire hamwe, ugenda urecordinga each and every item. Ni ukuvuga ngo that is the best way kugira ngo utagira ikintu na kimwe usiga inyuma. I think that what I can say on this question. So if there is no other question, allow me just to go to the next topic. And when the time allows, we can also do another question on this topic as well. So you want to take a photo, what you want just to zoom in, because we have a lot of here. We have a lot of, so but it's okay. This one will be shared to you. Sinzi impamvu muri kufotora because this one should be shared to you. There's no need just to make a photo on it. Kubera ko we'll be getting it later. Okay. Okay, now, so I think we are done with this example. Let's just also continue with the other topic. So niyonizeye, if possible, by the end you can share video. As I said, I don't have permission for recording this video. This one is just being recorded by Icpar, but I just we request the Icpar to share with you because for me I don't have an access on it. Okay. Now let's go just move to the next topic, unless if there is any other question on this. So hari ikindi kibazo before just moving to the next slide? Okay. So I think there is no other question. So now let's move to the next slide as well. So the next slide is just relating to the PIT or employment income. So Eric, can you explain royalty fees of 5%? So it is very clear also, Eric. Let me just maybe go up just to show you where it was referred to. So niba mubyibuka neza, yesterday I said, and let me also say it again, when you are doing this paper of advanced taxation, at least please make sure you understand well and very clearly this list of deductible. So there is no need just to spend much on deductible expenses because it's very clear. For non-deductible, that is where you have to put more focus. Or in non-deductible expenses, you can see on this point, we said management, technical services, and loyalty fees paid to non-resident person exceeding 2% of turnover of the taxpayer. This one is not around, okay? And then on the question, examiner said the loyalty of 5% of sales has been paid to the parent company which operating in Kenya. So it means that that company is not resident person or resident taxpayer. And then because the law says the excess of 2% is not allowed. So it means that the difference between 5 and 2 is 3%. The 3% then should be added back as an unallowable loyalty fees paid to that parent company of the company that was just provided in the question paper. So I think maybe you understand the way how we treated this loyalty and the way we also what is the provision that we based on as well. So nukuvuga ngo rero, please let me also repeat again. Please at least go in the exam with at least knowing this. I can maybe I see for those who will be doing the old, you'll be having also the material. At least please make sure aho izireti ziri wahashize akantu kugira ngo when you are doing this question you go and refer to what is provision is saying on it. Ariko for those who are doing the new, because there will no open book, there will no book in the exam, at least you make sure you understand and these these lists of non-deductible expenses. Okay. So now let's move to the next topic. So then the next topic, as I said, it is just relating to the PIT, personal income tax and employment income. The reason is why I combine these two because when we are just computing the tax, we use the same tax plan. Again, the reference law is this for the old, but also remember for the new, it is also the new law, which is the income tax of 2022, as also amended in 2023. So now, personal income tax. The taxable income under PIT is computed using the same format as CIT. The only difference is just the applicable tax rate. Because you can see on person, that is personal business. For example, someone who do the business as individual. But remember, again, that person also may also pay salary, may also pay the maintenance, may also pay the electricity, they can do advertisement, they can do whatever and whatever. So it means that the format is the same. And even what we consider as non-aerobic expenses and the non-aerobic expenses is the same. And the exception only on personal related expenses, but also it was also there highlighted under CIT. So it means that PIT and the CIT will use the same format. The only difference is just applicable tax rate. Sorry. There was just a connection issue. Let me just allow me to share it again. So now, okay. Then I was saying, so for tax ban for the new law, the exception, the amount which is now just not paying tax has been increased from 30 to 60 and also included in between the other ban, where for now, for new law, so on the individual or employment, so the payee starts from 0 to 60, which is just taxed at 0, 60 to 100 at 10%, 100 to 200 at 20, and above 200 at 30%. So duly, as I said, those kind of rate will be also provided in exam. So na mpamvu yo kugira before just giving you the question on the front page, there will be also that kind of rate that you will also using in answering the question. The difference from CIT is that under PIT dividend received from local company are taxed, while under CIT they are exempted. So again, you can see under PIT the dividend received from local companies are taxed because you remember the reason is why under CIT we said the dividend received between two companies. One is just paying dividend and the other is just receiving a dividend. And remember, individual is not a company. So that is the reasons why even though you are individual and you receive the dividend from a local company, but still you have to pay the tax on it, and then you'll be allowed to deduct that with all the tax deducted at source. And again, you can see the first 360 is tax-free, whereas the entire profit generated from CIT is taxed 30%. So the reasons why I put this is just try to put it on annually and see how also PIT and CIT is different. Kubera ko twavuze ngo 30 ya mbere ari exempted, so ni ukuvuga ngo nta musoro yishyura, and then iyo ufashe 30 ugakuba 12 ubona ko ari 360, and then ariko kuri company corporate kuri CIT there is no exception cyangwa tax free. Ni ukuvuga ngo the whole amount should be paid tax at 30% or 28%. So now again, on employment, when we are just talking on employment income, the first thing you have to note, the employment income is usually composed by two things. The first is cash benefit. The second is benefit in kind. And then on cash benefit, when we are talking on cash benefit, we just want to talk about the wage, salary, leave pay, sick pay, medical, and whatever. That is all item that received in the form of cash. So all what you received from your employer as cash, relating to what you have been done as employment, relating to what you have done as working to or providing services to that employer. So that one is classified under cash benefit. It can be salary, it can be leave pay, it can be bonuses, it can be sick pay, it can be extra, whatever. That one should be considered as cash benefit. And again, we also have benefit in kind. Those what we call benefit in kind are those maybe what you have been what you received from your employment, but which is not just in the form of cash. So now from the employment, from the benefit in kind, we also have the list. The first one is motor vehicle benefit. So you can be given the motor car in your company and then be allowed to use it in your private and business affairs. In that case, because also remember, there is other staff who does not have such kind of benefit. So that's why you have also to pay that benefit you received as other things which is extra in your work. And then because it is not just monetized, you can't say, for example, this and for these vehicles, one is just being used in business is equal to this percentage, other which is used in private affairs, this amount, and then you add that actually used in the private affairs. So the law says because it is not very easy to count them, let's just take 10% of the employment income as the benefit in case you have been given that kind of motor car. So Jimmy's right back. Okay, yes, Jimmy. Is there any question on this slide? Okay, let me see. So want to take snap. Okay, thank you. Good. Okay. So now, okay, and then on the next benefit in kind that we have just house benefit. Also, that is when also you also been given the house by your employer. This also the law says at least we take 20% as benefit. When we take 20%, just being added to your employment income as benefit in kind. And then also when we are talking this 20 or 10, we exclude the other benefit in kind. And again, also there's a time where, for example, instead of just maybe the company have the house and then give that house to you, they can even also rent the house from other third party. In case there is a rent, may either by rent for house or motor. So what we consider that amount paid as rent, and then that one we consider as cash benefit. You can see it's a note regarding to this because the law says a rent of house or motor vehicle directly paid for an employer for an employee is taxed based on the value paid as cash benefit. And again, we have also benefit on the loan, including advance on the salary, exceeding 3 times monthly salary given to employee, valued at the difference between the interest on the loan, which would have been paid by the employee, calculated using the National Bank of Rwanda interest rate, and the actual interest paid by the employee in that month. So here, to be clear and also at least to understand very well, on the loan, you have two types of loan. So there is a loan, which is normal loan. Your employer may give you a loan, okay? And it is allowed. But in case the revenue authority found that the interest rate provided on that loan is less than the interbank rate provided by the National Bank of Rwanda, the difference just consider as benefit. And again, under the normal loan, there can be also the salary advance. On the salary advance, the law says if it is salary advance, the first 3 months salary is allowed. If that salary advance is not more than the first 3 months. In case it is more than 3 months salary, so the excess should be also considered as a benefit, but it should be considered as benefit in case also the interest rate that was applied on that salary advance is also less than the interbank. So it means that either salary loan, normal loan, both we consider having the allowance on it in case it has been provided on the interest rate, which is lower than the interbank rate. So that means that in case the interest rate is more than the interbank, there is no benefit that we should consider on both. Ndagira ngo byose bibe clear kubera ko there is a time where examiner may give you the question and also try to trick you, and then instead for saying, for example, the company A has just provided a loan to the staff, which is equivalent to 100 million, and that 100 million was provided at the interest rate, which is equal 15%. And when you look at interbank rate, it's around, for example, 11%. In that case, there is no allowance because you can see already the interest provided, interest rate is greater than the interest given by the interbank rate. And then that is also the same on salary advance, because what we are looking here, we consider only as benefit in case there is a difference. In case the interest rate that you have been provided such loan is less than the interbank rate. In case the interbank is greater than the interest, there is no allowance, there is no benefit. And again, you have also to look if the question provided, either examiner says as other loan, it is just normal loan, or the salary advance, because when it was clearly indicated as salary advance, at least you have to make sure, at least you have to see if it is more than 3 months. If it is less than 3 months, also there is no benefit. If it is more than 3 months, so you compute the benefit on excess as well. So on the other includes, there's also benefit in kind provided by employer to a person related to employees when there's no services landed. Benefit in kind provided by a company to one of its member. All those we consider as the benefit in kind. Okay. So now let's move to the next. So when you see that is the payment that actually we are not included, or when we are not considered as taxable employment income. So that is the list. Again, you have also at least to understand this kind of exception, because when you are dealing with the employment income question, at least you have to understand which payment is not considered as employment income, and which one also is considered as employment income. So for the income which is not considered as employment income, the first one we have a discharge of or reimbursement of expense incurred by the employer on his or her associate. So whether it's wholly for the business activity or those that are deducted or would be deducted in calculating the employment income from all his employer or her business activity. There's also contribution made by the employer for the employee to the public institution in charge of social security. So you can see someone who know how actually we compute the payroll, specifically for public, because also it is also the same for private. Almost they are the same. The only difference is on medical insurance. You can see we compute the contribution to RSSB after just computing what they pay. So it means that that allowance or that contribution made to RSSB does not be included in the employment income that you pay the tax as well. So now there's a pension payment from the public institution in charge of social security or from qualified pension fund. And when we are talking on qualified, that is also other fund that was approved by the government. And again, we also have employment income received by employee who is not a Rwandan citizen from a foreign government or non-government organization under an agreement signed by the government of Rwanda, and when the income is received for the performance of aid services in Rwanda. So there's also employment income received from employer who is not a resident in Rwanda by a non-resident individual for the performance of services in Rwanda, unless such services are related to the permanent establishment of the employee in Rwanda. So ni ukuvuga ngo for these last 2 points nazo mugomba kuzimenya neza, kubera ko iya mbere turavuga ngo hari amafaranga weho wakiriye ariko ukaba utari umunyarwanda, okay? Kandi ukaba yakira mu kigo nacyo kitari registered mu Rwanda. Icyo gihe barakubwira ngo ayo mafaranga wakiriye, nubwo twavuze ejo, iyo ugiye kureba consequences zo kuba resident, baratubwira ngo iyo uri non-resident ntabwo uba liable kuri income wageneratinze mu gihugu cyawe, ahubwo uba liable kuri income wageneratinze hano mu Rwanda, nizo income wishyurira umusoro. Ariko hano bakatubwira ngo igihe wayakiriye, yes, ntabwo uri resident, noneho ukayakira avuye mu kigo kitari resident, icyo gihe batubwira ko ntabwo bayataxa, ariko ibyo nabyo babikora mu gihe icyo kigo gifitanye amasezerano na leta y'u Rwanda, cyane cyane for example mu gihe iyo income wayakiriye wenda muri icyo kigo wari gukora ibintu bijyanye n'ubufasha na serivisi z'ubufasha mu Rwanda, bakongera bakavuga ngo iyindi tutemera ni employment income yakiriwe ivuye ku mukoresha nawe utari resident, nawe ukaba utari non-resident for the performance of services in Rwanda, uretse igihe wenda tuvuge icyo kigo gifite permanent establishment. Icyo kigo gifite permanent establishment aho ngaho rwose ho turayatax, ariko mu gihe kitari permanent kandi nawe ukaba utari ntuza, icyo gihe nta ntuza I mean uh, nta izo income wa generatinze ntabwo ziba taxed. Wenda nk'urugero naguha ni ukuvuga dushobora kuba dufite ikigo let's say bino bigo bikora online, okay, tuvuge ngo let's say like Google or tuvuge Twitter. Umunayigeri uri hano ashobora kuba akorera Twitter, wenda yakira akora muri call center yabo, yakira abakiriya bafite ibibazo, just handling a complaint. Ukuvuga ngo the income ageneratinga kuri Twitter, iyo income yishyurwa na Twitter ntabwo tuyitaxanga. Icya mbere, Twitter ntabwo ari ikigo kiri resident. Icya kabiri, uwo muntu nawe ntabwo ari umunayigeri. Ariko mu gihe wenda tuvuge iyo Twitter ifite permanent establishment hano, iyo tuvuze permanent ni ukuvuga ngo ni ikigo cyemewe mu by'ukuri mu buryo bw'amategeko aha ngaha. So income kizakwishyura tuzayifata nyine nk'ikigo cyemewe, and then iyo izaba taxed. Tumva ari rwo rugero nabaha aha ngaha. So now, there's also person exempted from employment income tax. The person that we have who are exempted, the first one is a foreigner who represents her country in Rwanda. The second is any other individual employed in the embassy. The third is an citizen individual employed by international organization as well. So now, as I said, that is the applicable rate. And remember, for the new tax, there's also additional ban that was just provided here. So I will also try, I was looking if maybe I can just try to see. So I was just looking how we can just trying to see how I can just make 2 copies of this note, and then maybe I will just try to tell Icpar to make sure at least for those who are doing the old CPA to share your concerning note, and then for those who do the new CPA also to share your concerning note, just to avoid the confusion. So maybe I will do that kugira ngo bitazaba confusing. So I can just try to see where there is a big difference, and then I can share the separate note as well. So So Frank, mbaye ndi umunyarwanda ukorera Twitter, said, do they tax my income? Yes, of course. Kubera ko we have seen on the consequence of resident. If you are resident, if you are a citizen of Rwanda, you are liable for the income generated here in Rwanda and the income generated outside. So bivuze nubwo utaba uri gukorera hano, sibyo, ukaba uri umunyarwanda, ukaba wenda tuvuge utuye ahandi cyangwa uri hehe, ubundi you are liable yuko wishyura umusoro kuri income generating. Ni uko itegeko rivuga. Ntabwo bareba ngo yes ngo uri hano uri hehe, ubundi biravuze ngo umunyarwanda aho yaba ari hose kuri income yose yakiriye aba agomba kwishyura umusoro, yaba ari hanze, yaba ari hano, yaba yakoreye ikigo cyo hanze, yaba yakoreye icyahangaha, icyo cyose yakorera aba agomba kwishyura umusoro. Okay, now again on other rate that is applicable, so this one is also common. There's also income from casual labor, where that casual labor, so for them we charge 15% as tax. And however, when we are computing casual labor, also the income not exceeding 30,000 is excluded. So it is also the same on NIU. The income also that does not exceed 60,000 are also excluded. And then also we have sitting allowance. This one is charged at 30%. And also second employment is also at 30%. So it means that so Alpha Icpar izategura Icpar already. Yes, niko bimeze. Alpha, maybe you joined today only because we did not attend the yesterday session. It is very, very clarified by Icpar. Ni ukuvuga ngo you are still, because you are two party. You remember, niba warasomye neza the process of just phasing out this old CPA. Now the Icpar started from the lower level, and then the next sitting they will also starting phasing out the second level. So they started on the foundation level, the next sitting they phase out the intermediate level, and next sitting also the advanced level. Because you are already in the advanced level, you still using or you are still also considered as CPA who are just doing all the CPA. So you will do the old exams as well. But for those who joined as new in a revamped program, so it means that that one will do the new exam. And then as I have also shown you, the format are different. And even you can see for the existing student, you are allowed to just using the books during the exam. Ariko for the revamped, there's no exam. I mean, there's no books in the exam. So that is also something that you also always know. Okay, then, so now I was saying for this kind of question, sorry, for this kind of uh, rate regarding to sitting allowance or second employment. So there is a where examiner may give you the question, saying, for example, we have Alex, who has been also been an employee of BK company since 2025. So akaguhereza the benefits you are getting from BK, and on the other side, bakakubwira ngo, but also they have other company where he used maybe to work a part-time job. And then they say, it's a part-time job. They have that person also has the contract, which is not like the consultant's contract. You remember on the consultants, what the company do, they withhold 15%. But if you have other contract like employment, so the law says it's up to you for you to say this one is the first employer and this one is second employer. The reason is why they're asking you, it is because for the first employer, they apply the normal rate, which is the tax band from 0 to what. And then for the second employer, they don't just go on the same rate. While they do, they apply 30% kuri your second employment income. So that's the reasons why in case also you have been given such question, at least you understand. You read carefully and see where the examiner has just tried to show this is the first and this is the second, or where also the information given may also allow you to see this is the income from the second employment and this is also the income from the first employment. Okay. So now you can see also we have the contribution to pension, maternity, and also the medical insurance as well. So when you see we have the contribution, that is actually the contribution is made by the employee and employer as well. So that means that there's a pollution of employees and also the pollution of employer. On the pollution, when you look at pension, you can see the employee the pollution of employee is 3%, while the employer pollution is 5%. So on maternity leave, they are the same, is 0.3%. On medical insurance is 7.5%. And then also they are the same. And then we have also CBHI, that is community-based health insurance, mutual. This one is only paid by the employee. And also we have at least to note that when we are just computing this contribution, we have different bases because you can see on employee, on pension, we base on gross salary minus the transport allowance. That is the same applied on maternity leave. And when you look at Atilama, which is medical insurance, it is just applied only on basic salary. And then on CBHI, it is applied on net salary. So it means that after just getting your gross and then you less the payee, you less the contribution in getting to pension and the maternity and whatever, and then the net that you get, you apply the 0.5% as CBHI contribution. And again, remember, for the new CPA, for the new law or new CPAs, you can know also now it has been changed. So now, on the new law, pension, the employer and the employee provide the same contribution since 2025 January. So they pay 66, so that is 12. And then on the maternity, they are the same, 0.3. So on Lama, there's no change. On CBH also, there was no change. And the only change also that has been implemented in the new pension law, it's also the basis, because now, before, the transport allowance is usually excluded, but for now, it is also included. So it means that the pension is based on the gross salary, the total transport and housing allowance as well. Okay, I can see. Yeah, Jimmy just try to respond to you. Okay, that's good. And then, so that is also the other contribution that also you have to note. So now, yeah, that is clear. So now let's move to other personal income. So instead, even though we have seen the most personal income is just relating to employment, it came from employment, and there are also other personal income. For other personal income, we have the income from investment, we have the income from capital gain, we have financial income from deposit, guarantees, government security, dividend, royalty, rental, foreign income from consult, and also other income from consultant services. And then the tax on foreign income is also deducted as foreign tax relief. However, double taxation provision are constant, and the foreign tax should not exceed the local taxes. I think this will also we have seen it yesterday regarding to double taxation agreement. So other things that you have to note here, if you have been given, for example, someone, the examiner says this person has been also employed by the company A, and then by just looking to the contract with them, that is the benefit that was just detailed in the contract. So after that, they also add that this person also has other investment. So it means that they can say also this person has made the investment in making a deposit where he has been received, for example, the interest which is equal to this amount, or they have just bought shares from any given company, and then the dividend which is equal to this amount has been paid, or they have also other activities in relating to the rent and whatever. So when you are just computing the tax from our employment income or personal income tax, so what we do, we just first compute the income from employment, and then we add that income from other investment. So it means that we don't need just to compute the tax for employment aside, and then we come back, we compute also the tax for other investment. So what we do, we combine all those income from employment and the other investment, and then after getting the total, that's where we starting just computing the tax payable as well. So the reason why I'm saying this is it is because I don't know, I don't remember which question is it from. Is it May 2025? So there was a question where the examiner just provided just such kind of information, but most of the candidates you have seen, most just try to compute the tax liability for the income generated from employment and the other tax liability from other investment, and then they make a total after, which was totally wrong. So because it is the same person, you combine all those income from different sources, and then you compute the tax on the total, not on each and every sources. So I think that is also very, very clear. So now, okay. Is there any question here before maybe we move to example. Yes, Alec, you are just requesting me to clarify again on the salary advance. Allow me just to share my screen. Okay. Yes, Foster, yeah, the car benefit is also considered as transport allowance. And then housing benefit is just considering also as a housing benefit. Yeah. Okay. Okay, let me just try to put the other sheet here. So on the salary advance, let me just want to make it clear, at least you can understand. So let me just put here loan benefit. So the first things that we have just noted under loan benefit, the first is just salary advance, and the second just normal law. So I've been given a normal law, which is not just advance. So on a salary advance, as I said, for example, the law says the only benefit that we consider on a salary advance is just the salary advance, which is more than 3 months of the 3 months of the salary. So you can see when we take an example, for example, we can say here we have Peter. Okay, we have Peter who earn a monthly salary. For example, 1.5 million. Okay, 1.5 million. And then the examiner says, for example, during the year ended, oh, doing the math, it's okay. Doing the math ended 30 years. Let me say during the month of March 2025. Salary advance of, for example, 10 million at the interest rate of, for example, 2%. Okay. The interbank rate, or you can say the central bank rate, CBR, was, for example, 6.5% or 6%. Okay. So now, when we are just want to compute the allowance, benefit in kind on this kind of example, first you have to see the monthly salary is equal to 1.5. Okay. So that means that the salary of 3 months, you can see it's just this amount times 3, which is this one. So, and then the salary advance received is equal to 10 million. So that means that the excess on this here, based on this provision, is equal to this one minus this. Okay. So that means that our benefit so will be computed based on what? On this excess. And then to get the benefit, so we take this one times, so the difference between this rate, you can see the CBR is 6%, while the rate that was just provided on this salary advance was 2%. And then you see that is that one will be considered as benefit. And then, as I said, if, for example, the question is also provided in other ways, for example, the examiner says, instead of putting 2% here, put, for example, the 80%, because 80% is more than the 6% for CBR, so there is no benefit, even though the salary advance provided is greater than the 3 months of monthly salary. Okay, I think that is very clear on this. So first, the car benefit is considered as transport. Yeah, that is, yes, that is correct. The allowance included in salary advance like housing, transport, or another cash allowance. Yes, I think that one also is also included, because the law also is not clear here, because it cannot say either if we consider basic salary or gross salary, but what we say here is just salary that we consider in the, for example, in the employer's contract. So you can see if you, maybe you can check from, if you have a contract, employee contract, you can check from the contract. They say that is basic salary, this is the transport allowance, that is housing allowance, and then they make a total of your salary, which is gross. That gross amount, that one is that one you consider. But in a case, for example, it is clearly indicated, but there's a time where also the examiner may just say, for example, the benefit was also counted based on the basic salary. In that case, you consider basic salary only. But what we consider the gross here. And then, so you can tell us the real rate of central bank in Rwanda. So it keeps changing alpha, because you can see now, if I remember the last quarter, it was on 7. Let me just check CBR rate. But what I can say, tell you, alpha, it keeps changing, because it was changing after 1 quarter, 2 quarter. I mean, 1 quarter, it can be 6, the next quarter 6.5, the last quarter and whatever, because the central bank used this rate as a as the way of just managing the cash, I mean, money in its circulation and whatever. So if you remember in economics, that is also the most tools that usually used by the central bank to to manage the money in circulation. If they want money to be injected more in they reduce, I mean, they increase the the CBR rate. If they want money to be injected, they reduce the CBR rate. So it keeps changing. It depends on the situation. So as Eric said, maybe it's not today in 6.5, but in next quarter it can be 7, or it can be changed to other, or also keep the same as well. It depends on the circumstance. Okay. Service manager closed by the bank issue loan advance on the basis of net salary. Why such difference perspective? So the reason is why you can see regarding to this one, maybe we can have a long discussion on this. Kubera ko, even the law does not also specify either if it is on net or whatever. Ariko remember, hari ibintu sometimes biri twiga, ariko sometimes when you go in real life ugasanga applicability yayo iragoye. Kubera iki? Nk'urugero, kuko tuvuze ku kibazo, tuvuze wenda let's say when you are doing an exam, ni ukuvuga ngo how you can compute the net and then you come back you compute the allowance, the benefit. Urumva ntabwo biragoye kubera ko we go systematically. We start on basic, we add other ones, we continue until we compute the net. So there is no way you can just compute the net and then you come back. Otherwise, kereka wenda iyo net bayiguhaye, ariko nonese bayiguhaye baba bari kubaza ngo computing iki. Urumva ko on the other hand is not applicable, it's not applicable. But what I can say, only your concern, what you are saying is true. The reasons why maybe the bank and even your employer maybe also they base on your net, because already they know what is your net take home. The reason is why they base on the net is because the labor law. The labor law, there's an article, I don't remember the provision, the article number of that law, where the labor law says no one is just allowed to take more than 50% of the salary of the employees. So it means that whoever you earn, if you have been given the loan, either by the bank or by any other institution, if it is legally binding, or I mean, if it is legally, that institution is legally registered and dealing with that financial services or providing that financial services, the bank cannot go above 50% of your salary. So that means that they cannot give you the loan where they can see that when you start paying the loan, you will pay more than 50% for your salary. So they limit, they say, for example, whatever you earn, we have to see how much loan should be given to you, and then you will be allowed to pay at least 50% of your salary. Ariko does not mean that ushobora gufata loan ukagenda ugafata indi loan. So you can take the salary advance from one bank like BK, and then the next time you go to more cash, and also the next time you go to Baker Quick, or you go to EVB now ugafata inguzanyo. So it's okay, it's up to you. Ariko ku bigo bizwi bikora bitanga iyo serivisi ya loan, so iyo limitation iyo irahari muri rusange. So let's come back to no academic. Kuri academic, it's not applicable, it's not practicable, kubera ko ntabwo wabezingira kuri net, kuko icyo tuba turi gushaka niyo net ahubwo. Ubwo rero ntabwo wayibezingira ngo bikunde, ntabwo wa computing a net then wongere ugaruke computing a benefit. Urumva ko sometimes it's not applicable. So what we see here, at least we focus on what on what the law says, the provision of income tax law says. Kubera ko the reasons why I think the tax authority also provide this, it is because even though at least nubwo as the employer, nubwo ubuzi net y'umukozi, ariko at least ubuzi byikize kugira ngo iyo net igerweho ubuzi ibigize gross salary y'umukozi. So that's also when you are providing, at least you see all those conditions as well. So I think that's what I can say on this. So is there any other question? Is there any other question? So if there is no other question, okay. I can see we have almost 10 minutes to go. Where did you get 6 or 2? So Peter, that is an example. It's not just something that we borrow somewhere. It's just an example. For this example, I was just trying to show you how you can just compute the benefit in kind in case you have been given the question regarding to the salary advance. And what also clearly said here, in case you find the interest rate provided by the employer is greater than the interest rate as per interbank rate, in that case, don't compute the benefit. We only compute the benefit in case the interest rate provided by the employer is less than the interbank rate. That's where we say there is a benefit. Otherwise, there's no benefit. So now I was saying, if there's no other question, allow me just to stop here. And then next time we will continue by just quickly collecting the question relating to this, and then move to the next slide. So then don't worry, amasaha twagize nayo we will see how we can just provide it after. So we can also arrange any other session where we can also have a discussion kugira ngo amasaha tutagize tuzayakoreshe nayo. So now allow me just to stop from here, and then unless if there's any other burning question, but if there's no other burning question, you can stop here and then we resume when, let me just check from the timetable. So the next session is on Thursday, and the last one will be on Friday. But after this, we also see if we can have also another session before just doing the exam. So Joseline, we compute interest mwigore mumbwire. So ntabwo nzi interest uri kuvuga iyo ariyo, ariko that was what I was saying. For here, if you have been given the question where you have to compute the benefit resulted from the loan, we compute the benefit only when the interest rate yahereweho inguzanyo n'umukoresha, sibyo, ari ntoya kuri interest rate ya interbank cyangwa central bank rate. Hano nk'urugero twari twatanze mbere, ni ukuvuga ngo iyi rate ya mbere yari 2, kandi urumva umukoresha yaguhaye inguzanyo kuri rate ya 2, mu gihe central bank rate ari 6, bivuze there is a benefit, kubera ko even if you should have been, for example, taken that loan in commercial bank, uba wishyuye kuri rate nyine isanzwe iri normal cyangwa iri more than 60%, ariko kubera ko wayihawe n'umukoresha wawe akaguha kuri rate iri ntoya, iyo tubibara as benefit, niko ubundi twebwe hano tubibara. So ni ukuvuga ngo rero in case for example baguhaye ikibazo bakavuga ngo instead of just 2% is 8%, so that means that there was no benefit here, kubera ko already interest rate baguhereho ni nini kurusha iya interbank rate ya central bank rate, so there is no benefit. Ndumva ahangaha aricyo wenda nari ndi kuvuga kuri point. So ejo ese iyo turi gushaka benefit ni kind like housing of vehicle gross salary dukoresha iba iriho all benefit in cash cyangwa ni allowance zonyine twatereje kuri basic salary. So Deborah, ni ukuvuga ngo iyo turi gushaka benefit in kind, itegeko riri clear yavuga ngo benefit in kind ingana na tuyicomputing kuri employment income zose except other benefit in kind. So bivuze ikintu kuvuga ngo dufata izo za housing, izo za transport n'izi and other cash benefits zose tukaziteranya. So iyo tumaze kuziteranya, the total niho applying aho zero rate either 10 or 20%. So now ni ukuvuga ngo the only part we exclude when we are computing the benefit in kind like housing or transport, we exclude any other benefit in kind. Ariko izindi zose we combine it and then we apply 10% or 20%. Ndumva nabyo bibaye clear. Okay. Okay, then. So how does RRA collect income tax from Rwandans living abroad without coming intermittently back in Rwanda? So they collect the tax. Remember, Jimmy, what I was saying, what we were just saying, we are saying you can be, for example, the foreigner, I mean, the Rwandan who live abroad. Okay. And then you have maybe a business or you are employed there. And remember, even though you are there, we have an embassy there. And the embassy may have also your information and whatever. So I think that is the way LLA may collect the tax through embassy. And remember, as we have seen yesterday, through double taxation agreement, EU Rwanda have double taxation agreement, for example, with the USA and whatever. So even though you are there as Rwandan, you are working there and whatever, the tax you paid there, that's okay. There's no need just to come here in Rwanda and then say, for example, let's just see what it was not just corrected. Unless what you have paid is less than what you should have been paid here. So ndumva aribwo buryo wenda bakoresha through that kind of arrangement kugira ngo nyine bamenye who is earning, who is whatever, who is not earning. Ariko remember, niba ubizi neza, the most of Rwandans bakorera hanze cyangwa bava hanze, most of them bafite akazi kandi katazwi. Ntabwo ari abantu, kuko ubonye ufite akazi kazwi mu kigo kizwi, uwo nguwo rwose baba bamuzi, bashobora imisoro barayikolekitinga. So lecturer, may you clarify how to identify cash benefit and cash and benefit in kind, and because sometimes it confuses us. So ni ukuvuga ngo Peter, what we have said and agreed as Icpar, we have agreed kugira ngo iyi confusion iveho rwose. What we have given in the law as benefit in kind is clear. We have house benefit, we have transport allowance, and we have a loan. Izo nizo ziri clear bavuga mu itegeko. So bivuze iki? Any other information provided, we consider as cash benefit. Even though, for example, you see, hari igihe bavuga ngo the company pays, for example, the school fees of maybe the staff of children. Ariko remember, even though the school fees is paid directly, for example, to the school of their children, and remember, it is just in form of cash. They said, for example, each children, the employer paid, for example, 100,000. That 100,000, if the employer is just not paying it, the employee should have take that money from their pocket, from his or her pocket, and then pay it to the school. So it means that in that case, ni nko kuvuga ngo aho kugira ngo njye amafaranga ave mu mufuka wanjye nyishyure ikigo, umukoresha wanjye ahubwo niwo wayankase, reka ariko mbyita, yayamfatiye ayahereza cya kigo. So in that case, ntabwo wavuga rero ngo ayo mafaranga ntabwo tuzayabara as benefit in cash. So turavuga ngo rero, all things that can be quantified in money should be treated as cash and benefit. And then izisigaye zose noneho ibyo considering as benefit in kind bigasigara ari ibyo tuzi biri mu itegeko. Okay, so ni ukuvuga ngo iyo baguye ikibazo, you try and see all other things that you have been provided in exam, all transactions, all items you add as employment income. Let's say simply as benefit in cash. And then if you have been also given, for example, that staff has been given a car, has been given a house and whatever, and in that case, is on izo to computing as benefit in kind. Tubezingiye kuri toto ya bya bindi byose twashyize hejuru. So, and again, remember, there is also funny fact. I don't know if I can call it funny fact or funny things that has been also done by the student. When you see in the list of cash benefit, there is also transport allowance or housing allowance. Because you have seen, if you make, for example, instead of just providing you the company car or providing you the company house, your employer can even also go and rent that kind of house and car as well. In that case, ni ukuvuga ngo batubwiye ko iyo umukoresha wawe akodesha ya nzu cyangwa ya modoka kuri third party, amafaranga yishyura tuyabara as cash benefit. Okay, nabwo transport, aho kugira ngo baguhe imodoka, company ishobora kugiguha cash. Izo cash rero nazo ziba added as cash benefit. So impamvu uvuze ngo rero hari ikintu cyabaye funny cyangwa gisa nkaho cyagize, nuko hari umunyeshuri ikibazo batanze bavuga ko company yishyura cash benefit, batanga amount yayo, arangije iyo cash benefit including muri cash benefit, ageze hasi arongera computinga benefit in kind yo kuri transport. Mu by'ukuri urumva ntabwo azi logic behind, ariko ni ukuvuga ngo either umuntu ashobora kuguha instead yo kuguha wenda imodoka akaguha ayo mafaranga. Urabizi most of us mu kazi dukora ka buri munsi, muri party ya salary yacu haba harimo iyo ntuza, haba harimo iyo transport allowance, ariko nta modoka baduha amafaranga and then tukirwariza. So nduva wenda aricyo navuga. Sinzi niba kiri clear, sinzi rwose niba kiri clear. Kibaye kitari clear, ubwo we will see it just when we are just doing the example. From the example, that's where we can see how I actually treat this kind of questions. So Joseline, iyo baduhaye cost y'imodoka cyangwa umushahara w'umushoferi ho bigenda bite? So ni ukuvuga ngo iyo cost y'imodoka nta kivuze rwose. Cost y'imodoka cyangwa y'inzu nta kidufasha, kubera ko iyo tu computing a benefit, ibyo ngibyo tubibara tubezingira kuri other employment income. So ku bijyanye n'umushahara w'umushoferi, ayo ngayo ni is also other allowance, nayo iba added back, kubera ko ni ukuvuga ngo uwo mushoferi akwiye kumwishyurira, ariko niba mukwishyurira that is another allowance. Ndumva nabyo biri clear. So now guys, let's stop from here and then maybe we continue by Thursday, where we'll be having is just more practical and then also trying to answer other question that you might have as well. So allow me to thank you so much for your time as well, and then see you on Thursday. Okay, thank you so much. Have a good night.